Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DYNEX Capital INC quarterly report. DYNEX Capital Inc. provides the following businesses and services: investment in mortgage-backed securities, MBS, in the United States agency MBS investment, including residential and commercial MBS, CMBS, agency and non-agency CMBS, interest-only securities investment, real estate investment trust, REIT services for federal income tax purposes. DYNEX Capital Inc. stock price has increased by approximately 27.84% over the past year due to several key factors. The company's strong Q3 2025 earnings, which exceeded analyst expectations with a net income of $150.39 million and an increase in interest income, contributed significantly to this growth. Additionally, DYNEX Capital achieved a total economic return of $1.23 per common share, representing 10.3% of its beginning book value, and reported a 10% portfolio growth over Q2. The company's successful capital-raising efforts, with the issuance of $776 million in new common equity capital, also boosted investor confidence. Furthermore, the anticipation of lower interest rates by the Federal Reserve provided a positive catalyst for mortgage REITs like DYNEX Capital, which is expected to benefit from a higher net interest margin. Consistent dividend payments and insider buying activity have also contributed to the stock price increase. Overall, these factors have combined to drive up DYNEX Capital Inc.'s stock price over the past year. The primary drivers of revenue growth are primarily attributed to an increase in net interest income, total other gains, and interest income. Specifically, the bank's net interest income rose by $69,882, while interest income increased by $125,446. Additionally, the bank experienced significant gains from its investment portfolio, particularly in agency RMBS, which contributed to a substantial increase in unrealized gains on investments. The lowering of the U.S. federal funds rate also had a positive impact on revenue growth. These factors collectively contributed to an overall increase in revenue. Net income and profit margins. A significant improvement. The financial performance of the company has shown a substantial improvement in net income and profit margins over the past year. For the 3 months ended September 30, 2025, net income increased by $118,487, 408%, compared to the same period in 2024, reaching $147,561,000. Similarly, for the 9 months ended September 30, 2025, net income rose by $69,234, 121%, to $126,276,000. Profit margins have also seen a significant improvement, with the net interest income margin increasing from -0.2% in 2024 to 3.6% in 2025, and the total other gains, net margin rising from 4.7% in 2024 to 9.8% in 2025. The reasons behind these improvements are attributed to changes in fair value of mortgage-backed securities, MBS, and a decrease in allowance for credit losses. The absence of credit-related losses and unrealized losses on investments due to higher interest rates have also contributed to the improved financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $106,517 in 2025, the company is successfully converting profits into liquid assets. This positive trend suggests that the business is financially stable and capable of meeting its obligations, positioning it for future growth and success. The company's debt level has significantly increased over the past year. Total liabilities rose from $6,999,643 to $12,201,146, while repurchase agreements jumped from $6,563,120 to $11,753,522. This substantial increase in debt is accompanied by a notable rise in interest expenses, which grew by 44.7% from -$82,564 to -$119,068. The company's cash paid for interest on repurchase agreements also saw an increase from $236,672 in 2024 to $219,768 in 2025. Furthermore, the accrued interest payable has more than doubled, from $45 million to $111 million. These changes indicate a significant shift in the company's financial landscape, with both debt levels and interest expenses experiencing notable increases. Financial performance overview. Our analysis reveals a mixed picture across various segments and regions. Notably, the agency RMBS sector has underperformed significantly, with all coupon rates experiencing a decline in spreads year-to-date, YTD. Specifically, coupons ranging from 2% to 5% have seen decreases of -4% to -3%. In contrast, agency CMBS has shown stability, with no significant changes in spreads YTD. The poor performance of agency RMBS is evident across all coupon rates, indicating a broad-based decline in investor confidence or market conditions. This trend suggests that investors are becoming increasingly risk-averse, leading to higher demand for safer assets and lower yields on RMBS securities. In contrast, the stability of agency CMBS spreads indicates a more resilient market segment. Management is optimistic about the company's outlook, citing favorable market conditions. With the Federal Open Market Committee's rate cuts, mortgage rates are trending down, and refinance activity has increased. The company expects agency MBS to remain an attractive asset class, delivering returns that will accretively contribute to its financial position. To capitalize on these opportunities, management plans to continue raising capital through its ATM program and deploying proceeds into additional investments. The company has made several significant transactions in the form of acquisitions and divestitures. Acquisitions include a total of approximately $263 million in agency CMBS pending settlement as of September 30, 2025, along with $5.2 billion of agency RMBS and $882 million of agency CMBS. The total value of these acquisitions is around $6.345 billion. On the other hand, the company has also made divestitures through repurchase agreements. As of December 31, 2024, the amount was $6,563,120, which increased to $11,753,522 by September 30, 2025. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, with a total of $167,755 paid out in 2025 alone. This is further evidence of the company's ability to generate cash and distribute it back to investors. In addition to paying dividends, the company has also engaged in share buybacks, purchasing up to $100 million of common stock under an authorized program. This strategic move aims to boost shareholder value by reducing the number of outstanding shares on the market. That concludes the financial summary for DYNEX Capital Inc. Feel free to comment below, and I will be happy to answer them when possible.